Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom podcast. Hey, I'm your host, Jacob Ayers, and this is Friday Fundamentals. Hey, welcome back to the show. Happy Friday. I hope you're doing well. This week's Friday Fundamental is hedge your risk. Risk, by definition, is the possibility that something bad or unpleasant will happen. We take risks, avoid them, mitigate them, and are surrounded by them at all times. From getting in our vehicles and traveling to investing our money and time, we take calculated risks every day. We all have different levels of risk tolerance. We have different perspectives of what risk is. To some people, investing their time and money is a risk. To others, not investing their time and money is a risk. We don't even always seem to agree what exactly risk is. Now, obviously, real estate investing comes with some risk. However, not investing in real estate also comes with risk. Some people will go so far as to avoid risk, they actually incur risks by doing nothing. Some will argue that investing is risky, and to that I say, also doing nothing is risky. There are opportunity costs of doing nothing. So this leaves us at a crossroads. Take risks if we do, or take risks if we don't. So how do we move forwards and not let risk paralyze us? Well, luckily for real estate investors, there are ways we can hedge our risks. Let's explore those. The first is to force appreciation. This is one of the biggest advantages of commercial and multifamily real estate. Since commercial and multifamily properties, those 5 units and larger, are largely valued on their net operating income or the profit they create, you can increase the value of the property just by increasing the net operating income. 2, buy for positive cash flow. When you purchase a property that creates positive cash flow every month, you don't have to worry about the current value of the property, current market conditions, and other things that are somewhat out of your control. This is because whether or not the property increases in value or not, you are still getting paid to own it every single month, and this gives you so many options. 3, secure long-term debt. There's almost no other asset in which you can get a long-term, say 30-year fixed rate loan. We might not know what the future holds, but with these types of loans, you can be sure that one of your largest expenses, your mortgage, will stay the same. 4, have adequate cash reserves. When you buy a cash flowing property, you are building up your monthly income every month. If you have adequate cash reserves, you are more easily able to handle those unexpected expenses that may arise. And 5, buy at a discount. When you purchase a property at a discount or a wholesale price as compared to a retail price, you can provide yourself with more wiggle room to complete the project, produce positive cash flow, or achieve whatever it is you're doing with that specific property. There are several ways you can find and buy discounted properties. Usually what you'll look for are either signs of owner distress or physical distress of the property. These include things like pre-foreclosures, foreclosure auctions, tax foreclosures, physically distressed properties, for sale by owner signs or posts online, and for rent signs. So those are 5 ways we as real estate investors mitigate and hedge our risks. Not to mention things like setting up business entities like LLCs, getting property insurance, and even having equity in the property. Yes, having equity in your property is a way to mitigate risk as it decreases your chances of being sued for the small amount of equity in that property. As real estate investors, we're constantly seeking asymmetric risk-return profiles, meaning the returns far outweigh the risks. The best hedge against risk is education. There's nothing that pays a better dividend than investing in yourself. Once you understand how to protect your downside and mitigate risks, you can begin to take calculated risks that you may have once felt uncomfortable with. Don't let fear of losing keep you from winning. Yeah, I'll say that again. Don't let fear of losing keep you from winning. Invest in yourself. Continue to learn and remember to look for opportunities where others see challenges. Well, that wraps up this week's episode of Friday Fundamentals. Hey, I hope you're getting so much value from this podcast. I want to thank you for taking the time to tune in and listen week in and week out. We have some really exciting upcoming guests. Next week, we'll bring on Mario Mazzamuto. I'm really excited to have him on the podcast. Well, with that, until next week, engineer the lifestyle you want.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.